What is going on, everybody? Thank you for being here. Really appreciate it. Got here right before it turned 11:31. How's everybody doing today? Markets are doing pretty well for the stuff that we care about. Before we get into it, do me a favor. Read the disclaimer that I don't have anywhere. Interesting. There we go. Why didn't it show me that when I went to bring it up? It was on the screen. Read the disclaimer, everybody. I'm not a financial advisor. I have no idea what your situation is. Please do your own due diligence. This is for entertainment and educational purposes only. And with that being said, let's get into it. Thank you, everybody, for being here. Charles must have walked 5,000 steps to be first. Rusty is here. Tommy Dimes is here. Diane is here. Mitch is here. Star is here. Cubits is here. Joni is here. Turtle, PB, June. What is going on? We are, wait for it, live. The 30 years over 5%. But you know what? The market said we don't care. The market has legitimately said we don't care if rates are over 5% on the 30. We don't care if we don't have a deal yet. Crude is up to 93.16. Yet the S&P is at 75.86. The Nasdaq cracks 27,000. I don't know. Feels like the market's calling BS on a lot of things, everybody. Feels like the market's calling BS. Now, I have to say, I'm pretty damn surprised at ARM. I stand corrected, everybody. I guess ARM did deserve to be above 200. I don't understand why. I don't get it, but this thing is pumping. It's been pumping. 418. The Nebius crew running wild in the streets. 267. CoreWeave, 124. I'm a shareholder now. I bought it the other week. ServiceNow, 137. Look at Salesforce. Where's all my Salesforce haters? Where's all my Salesforce haters? Oh, Salesforce sucks. Salesforce is dead. Blah, 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 blah. Okay. 210. It's not stopping there. Salesforce is a $300+ company, in my opinion. It ain't stopping. IBM, 327. Zeta cracked 25, everybody. Zeta cracked 25. We got Nokia up $1.13. Oracle, 242. Venture Global, 1289. Micron over 1,000. It's 1,031. We got Next Decade, 838. We got Uber. I think I was talking about Uber the other day. 73.30. NVIDIA, I got to tell you, NVIDIA, in my opinion, if you stayed up and watched the keynote last night, okay, you would have seen that Tanner really was exhausted. Captain Sleepy Time himself destroyed his sleep score. I have it on good authority. The sleep score was under 80 last night. NVIDIA is running 4% today. They just said, hey, PC market, have fun. Check this out. Check this out. NVIDIA is absolutely going to revolutionize the PC world. It's going to be crazy. Reddit, 181.68, incredible. It is running. Microsoft is running 462. IREN 65. Palantir holding 160. Broadcom 457. SoFi 1864. The Q 742. AMD 516. QXO trying to hold 17. You got Costco 940. Hood's down a little bit. Meta's down a little bit. Amazon makes no sense while you're down. What is going on with Rocket Lab? I'm sorry, everyone. I do not want Rocket Lab to go down. I do not want ASTS to go down. Rocket Lab is down 18.22. Apologize for that. Apologize. But you know what? Sometimes there's red in the markets, but sometimes there's a lot of green in the markets. I got to tell you, we got a lot of interesting things going on. I want to see, selfishly, am I catching up? Did I just catch up to Matt Money in the stock draft? Or did I catch up to Amit? Amit's got some runners. Oh boy. Oh boy, everybody. Oh boy. We have some news. Matt and I are neck and neck. Amit is in the lead in the stock draft. Matt and I are battling for second right now. Who would have thought? Who would have thought? It is a close race, everybody. It's a close race. Close race. We're going to come back and look at that later. I got to tell you, I'm feeling good. I think I can pull it out. For the first time in this entire draft, I really think I can make a run at it. If Meta turns and something happens with Bitcoin, I think I can turn it out. We'll see. Rachel, what's going on? Chef Mike, what's going on? Oh, we got Massasan talking about the AI revolution. We're going to get into a lot of things. Let's hear what Massasan is saying.
About
I just
investment
realized it
into
wasn't on the
AI,
screen.
and also this term he coined artificial super intelligence, AI that he believes is 10,000 times smarter than humans. This is where a lot of his bullish conviction is coming from at this moment, and we know he's made some very bold bets in the past. You think about Alibaba, the investment that really made Masayoshi Son famous, some not so good ones with WeWork, and now OpenAI. He's all in on this company, believing this is the company that's going to be the future, as also it hurtles towards an initial public offering right now. And right now, investors are shrugging off any concern around the concentration risk around OpenAI and ARM in the SoftBank portfolio, and are really backing Masayoshi Son's view. If you look over the last year, SoftBank shares have risen about 360% as some of the values of OpenAI, of ARM, and its other holdings have risen too. So clearly, this is the SoftBank plan is working for now. Masayoshi Son is convincing investors that he's got the right investments, and his longer-term view around and bullishness around AI is going to come to pass over the coming years, guys.
Yeah, becoming Japan's most valuable market cap company, overtaking Toyota because of those stakes. Thank you, Arjun. Great to hear from Masa-san. Pretty rare interview there. After the break, the CEO of Kalshi will join us. We'll discuss the regulatory environment for.
All right. You guys know where I stand on AI. We got to discuss Iran. So from what I'm seeing, Iran's cutting off talks, and they're threatening to fully close the strait. And that's what's causing oil to spike. The U.S. said it bombed Iranian radar sites, and President Trump said he would meet in the Situation Room to make a final determination, repeating that Iran must agree it will never have a nuclear weapon. Now, I don't know how the hell they're going to agree to that, but I mean, never is a ultimate term. Maybe if he said 20 years, I don't know. I mean, look, WTI is over 90, but the markets are still at all-time highs. We need a damn deal, okay? We really do. I cannot stress this enough. By July 4th, we need a deal because oil cannot stay where it is. I mean, energy going up is the worst thing that can happen. And energy going back to over 100, I'm very worried about that. But we'll see what happens. Right now, the market's calling BS. I think they can only play chicken with energy for another couple of weeks. If we don't get a deal, the chances of rate cuts, I think, get thrown out the door. But more importantly, how many of you watched the NVIDIA keynote? How many of you? I should probably do I'm going to do a poll. Let me get it up. Let me get a poll going. And thank you to everybody that watched Basis Points. We have 32,000 views on the Friday episode. Thank you so much. It means the world. Really glad you guys are enjoying the content. All right. Start a poll. Did you watch the NVIDIA keynote? Question mark. All right, we got the poll going. See, love it. Love it. Michael did with Captain Sleepy Time. Diana did. Tariq did. Love it. Star did. June did. Love it. A good amount of you. Look at this. 55% yes. Rachel, you know what? I like it. Maybe his new name will be Captain No Sleep. And Chels was tucked away in bed because she walks 20,000 steps a day and couldn't stay up. All right. I'm super excited. There's a lot to unpack about what was said. I need to go through it again. I'm actually going to rip a transcript from it. I really want to go through it again. I really want to hear Jensen talk about it. Is Jensen not the world's greatest salesman? Really incredible. The AI factories costing over $80 billion. NVIDIA is the one ring to rule them all. Every time I think about, and I know I said it yesterday, that I said to Amit, man, I should just sell a couple hundred shares of NVIDIA and just throw that money into some other plays. Every time I even think about doing it, it's like, why? I am so damn bullish on NVIDIA going forward. It is pretty scary. And last night solidified it. The fact that they've been working with Microsoft for 3 years to redefine. Oh, all right. I'm going to hold that thought. This is very important.
The largest asset classes on the planet today, it's trading over $90 trillion of volume annually, all of which is offshore, none of which is in America. And the announcement on Friday is Kalshi, and we're very proud to be the first regulated exchange in America to bring perps onshore. The reason we're very excited about perpetuals is because they're the purest form of trading. They're the purest trade, because all you need to trade a perpetual is a view. For example, on Bitcoin, whether it's going to go up or down. Then you take the leverage based on the capital efficiency requirements that you have. And then the key thing is that they're perpetual. They don't have an expiry. So when you trade an option, you have to have a view, but also a specific view on when that thing is going to happen. With perpetual, it goes on forever or until you decide to close your trade and your view basically no longer holds.
So who trades these?
So it's very diverse. It's both institutions and retail. They're incredibly popular offshore. So in America today, at least in a regulated environment, nobody.
Right. But Polymarket's been doing it, right?
Well, there's a number of other kind of companies that are sort of big in perpetuals offshore. And I think, you know, it's the demand has been very clear for a few years in America. People want it here. Institutions want it here because, you know, some asset classes are fit for traditional futures because they have a natural expiry, like commodity and agricultures. But others, like Bitcoin and digital assets, do not have a natural expiry. They go on forever in perpetuity. And so they require a future that doesn't end, which is a perpetual future.
Give viewers an example of a trade, or something that has high volume or that people are interested in around the world.
So Kalshi is starting with perpetual futures on Bitcoin, and then we're going to expand from there. Bitcoin is a very, very popular form of perp because a lot of people have views on Bitcoin going up, but a lot of people have views on Bitcoin going down. And there's no clean way to express that view today to sort of quote unquote short Bitcoin. Perpetuals allow you to just pick up or down and then pick the level of leverage. For example, you want this to move 1-to-1 with the price of Bitcoin or 5-to-1 with the price of Bitcoin. And then you can trade. You can hold the position all the way up until
You decide to exit.
you decide to exit. Very simple, very clean, very accessible. It's the purest form of trading.
A lot of people look at all these new products and what you're doing around predictions and say, this is gambling. It's not good. You're figuring out ways to do less regulated gambling, and it's bad for society. How do you respond to that?
So, if we're, getting a CFC regulated exchange and clearinghouse, as a lot of people would know, is a pretty stringent form of regulation. So actually, when we started the company in 2018, we didn't launch up until 4 years later to the general public, because we spent the first 4 years of the company getting regulated up front. It was actually a very, very brutal process of going through all the audits and the regulatory framework to get this license, and both for the exchange and the clearinghouse. So if we're trying to avoid regulation,
It's not good enough for the states, though.
Well, I think the state question is a little bit of a different question.
I think that we're going to start a new poll. Is this gambling? Is this gambling? Be nice if I could spell. Swear to God, I'm getting pretty bad at spelling or hitting the correct keys. Am I up triple digits today? No, I'm not up triple digits today. I don't know how I feel about this, though, everybody. I really don't.
I don't think this is a question of how regulated this is. It is very regulated. That's undeniable. I think there's a bit of a broader industry dynamic at play here, which is I think prediction markets and other assets are bringing innovation to America. And people are liking these types of marketplaces because they're more fair, they're more transparent, they trust them, they like trading against someone else, not against the house. And our margins are smaller than traditional gaming or other places. We make 1%, whereas traditional casino does 15, 20%. They're threatening to a certain set of incumbents, and like Ubers and taxis, like hotels and Airbnb. The legacy industry is pushing to curb this activity. But to me, what I'm focused on is really the customers, what the customers want, and the customers are speaking pretty loudly right now, and that's what we'll stay focused on.
Are you in regular contact with the states themselves who want a piece of this?
We talk to our primary regulator, the CFTC, and we're regulated at the federal level. And that's what we did with the perpetual futures. We've been in talks for years now. Actually, this has been years in the making of how do we bring, this is the Kalshi playbook. We find a market that people really want. Oftentimes it might be big offshore, and figure out how to bring it in a regulated, safe, and well-established format in America. We figure out the regulatory structure, and then we bring it in a safe, responsible way to Americans. That's what we've just done with perpetuals.
And whatever these states are going to do, that's
a state versus federal jurisdictional battle.
And you have no interest in trying to lobby the states directly.
It's a bit like the CFC and SEC have been fighting forever. My job is I figure out what the law says. I work with the regulator, my primary regulator, and I focus on my customers. And that's what we'll keep doing.
A lot of people think it's going to go to the Supreme Court. What about states like Minnesota, which wants to ban predictions altogether?
It's a little bit, so the same thing that they've done, they could do to the New York Stock Exchange, basically the room that we're sitting in right now. They could just say, hey, this looks like gambling because some people are speculating. And so this should be, state regulated or banned by the state of Minnesota. There's no limiting principle. They could do the same thing to the New York Stock Exchange. But that's why there is a federal framework for securities and a federal framework for commodities for financial exchanges to operate under. That's how the law is structured. So again, we're stay focused on our regulator. There's a bunch of lawsuits that will get figured out. And we'll keep building the products that customers want.
You also have another new product besides Perpetual, which is this political index.
Yes.
Tell us a little about what that does.
So it's the Kalshi American Power Index, or KPOW, that's the ticker. And the idea is basically, so today if you ask 10 people in a room, where do you think the country is headed, Democrat or Republican? And you get 10 different answers. And those answers are based on what their Twitter feeds are telling them and their echo chambers are telling them. I think we're living.
All right, I don't care about the political stuff. Anyway, I'm fine with this coming out with the perpetuals. I'm very worried about 24-hour markets. Maybe it is gambling. Maybe it's not. You have to do research anyway. You got to do research on stocks. Wemby is the truth. I agree. He's going against my Knicks, but I'm a realist. Wemby's no joke. So pretty wild. All right, let's get back to what everybody cares about. AI, chips. So NVIDIA last night, Jensen delivered what was one of the best keynotes in my opinion. And this is what I remember from the keynote, okay? I was most excited about the RTX Spark. So it's a new class of Windows PCs built for AI agents, positioning them as a tool for teammates. I mean, it's pretty wild. And the fact that they put it into a slim laptop, I mean, I'm going to get one of these desktops. There's no question about it. And from what I researched, it's all new chip. So it's the RTX Spark Super chip. It pairs, if I remember correctly, the Blackwell RTX and the Grace CPU. So they have that NVLink thing. And this, if you have a 5090 or 5080 video card, it doesn't matter. This is a new super chip. And I don't remember all the specs, but the fact that NVIDIA and Microsoft have been partnering on this for years is incredible. I don't know what this is going to do to the PC market. Okay. I really don't. I think that's why ARM is up, because everything is on the ARM technology, and why Intel and AMD are down. It really depends if Intel and AMD can come back and fight this or not. Anything Jensen touches turns to gold. And I got to tell you, how many people last night were sitting there like, please don't announce memory. Please do not announce that NVIDIA is getting into memory. How many people were sitting there sweating it out? I kind of was. So we'll see. I mean, it definitely looked, yeah, Lisa Su's amazing. I'm not taking anything away from AMD, Lisa Su. She's amazing. They're amazing. I'm really interested to see what NVIDIA does to the gaming market and what NVIDIA does with this. Qubits, I don't know anything about either of them. Plab and TSSI, I'll look at it. Thank you for the super chat. I'll come back to this in like 10 minutes. 100%. Jensen made me more confident in DRAM. And he made me more confident in the trajectory of the cycle. I think that the cycle, probably 5 years now, maybe 10. Yes, SMH, great way to play this. I agree. I do agree. So when he talks about local agents running on Windows autonomously, it gets me excited. Now, how is this going to impact the CPU market? I have no idea. But I do think NVIDIA is right place, right time, more than 3 decades of engineering, more than 3 decades of working on this. And I do believe you can't compete with them. My own opinion, you just can't compete with them. How this impacts the CPU market, I don't know. It's going to be interesting to see how this plays out. But you know what? I'm certainly not ringing the bell yet on NVIDIA. I'm going to stop saying, should I sell some NVIDIA? Question is, how far does it break out? I think that's the big question. How far can NVIDIA break out? And let's see where we are. And should we be looking at healthcare? Not in the traditional sense, not UNH, but should we be looking at genomics and that type of stuff? Nebius is obviously going wild because of we just need more compute. I mean, when you listen to what Jensen said last night, we need so much more compute. I mean, look at this. Nebius, ARM, and CoreWeave, all beneficiaries of NVIDIA. I mean, Salesforce 210, everybody. Can you believe it? I can. Zeta 25. Here's the crazy part. Zeta is still under 6 billion market cap. How crazy is that? Or it's right around there. It's such a small company. Freddie, I can make sense of AMD. I'll do it in a few minutes. Oracle 243, Nokia 1580, Micron 1033. You gotta love that. Uber catching a bid, everybody. NVIDIA catching a bid. Reddit really catching a bid. SoFi's trying to get back to 19. Can we do it? I think so. Microsoft 460. Huh. I guess I wasn't that crazy saying that Microsoft was disrespected, right? Guess I wasn't that crazy. Palantir lost 160. That's okay. AMD's basically flat today. I mean, look, you guys know how I feel. I'm not going to spend a lot of time on it. I think space ran a little too far too fast. I really do. So I'm not going to spend much time on it. Let's focus on the winners. I think there's a lot of room for these companies to continue running. I really do. I think there is so much room for these companies. So let's get to qubits. PLAB. I don't know what this is, so I'm going to take a very quick look. An industry I know nothing about. Why is it down so much? So PLAB, photonics. Okay. Let's bring it up. Let's run through it. I'm going to tell you this. I'm going to have to do more research. If I can give you the high level. Revenue's doing nothing. It's not growing. Positive operating income. EBITDA 274. They make money. Okay. What was the market cap? 1.9 billion. Okay. Cash flow. So call it 2 billion for my simplistic mind. 100 million free cash flow. So it's trading 20 times free cash flow. Okay. Not horrible. Buying back stock. Where are the analysts see this? So some EPS growth next year. Not much revenue growth. What does this company do? Let's see. Photo mask technology. I'm going to have to really look more into it. I don't know anything about this industry. I'll look at the other one real quick, TSSI. See if that's a little bit more appealing. Yeah, you got to remember, I don't follow companies that are this size. I really don't. $500 million market cap. $200 million revenue. Horrible margins. They are profitable. Come on, bring up the cash flow statement. There we go. No free cash flow. Expensive, but EPS growth. Next year, very limited. Yeah, I don't know. These companies are not something I would ever consider. That's just me. That's just me. I've never looked at ADUR. Yeah, I'd have to do more investigative work. I just don't really have the time or the bandwidth to do it. I have way too much conviction in other things that I think are going to do really well. I mean, Visa is a great company. It's not something I would buy. I have no interest in Visa. I mean, you have to look at things as opportunity cost. Do I think Visa can double or do I think SoFi can double? Do I think Visa can double or do I think Zeta can double? I mean, I think there's more alpha to be had there. Crude, 93.59. I do not like this. 93.59, everybody. I hate this. But you know what? We're getting a real run here. How many of you are ARM shareholders? ARM is absolutely killing it because of NVIDIA right now. I know a lot of you are Nebius and CoreWeave. And look at this. Zeta is freaking pumping. Man, Zeta is breaking out. Zeta is absolutely breaking out. Don't be surprised if Zeta goes to like 30 or 40. Do not be surprised. I'm telling you right now. Like in all seriousness, can Zeta become a $20 billion company? I think so. Now, is it going to become a $100 billion company? I have no idea. But 20 billion is not crazy. I mean, look, I own a lot of Zeta at like 1650. For me, I would not be averaging up. Or maybe I would. I don't know. I think Zeta is going to do really well. I'm not great at timing companies. My strong suit is having an iron stomach, being able to withstand volatility, and coming up with a thesis that makes sense from a value perspective. That's my strength. Okay. Like if I take a position and my thesis doesn't break, I have no problem holding it or buying more. Man, Zeta is absolutely going. Thank you, PB. Really appreciate it. Fluence Energy up 41%. Damn. And yes, I am looking more into the energy trade. If Zeta went to $1 trillion, Rachel, we would be having the biggest damn party. Okay. The biggest party. And also keep in mind, people hate Zeta. Zeta has short interest of 13.5%. Get ready for a short squeeze. That's the other thing. Get ready for the damn short squeeze. No, they didn't, Hollis, did they? Let's go. Let's go. Celery Trades, thank you so much. Really appreciate it. Non-financial entertainment. Thank you so much. KDP. I am going to buy that today. Thank you very much. Let me write it down. KDP. All right. It will be in the video tomorrow. Thank you so much for your generosity. You certainly didn't have to, but I appreciate it. Thank you again, Celery Trades. Hollis. We go in Sizzler. Okay. Filed that's one with SEC. Is it public yet, Hollis? Do you know? If it is, drop a link, please. I think you would love AMPG. Why does that sound familiar? Dude, you did not just say this is at $5. Oh my God. Hey, BT, are you related to me? Yes or no? I don't think you are because the person I'm thinking of probably has no idea how to send a super chat. Hold on a sec. You did not just say this. Or do you know, how about this? Do you know me in real life? BT, do you know me in real life? You did not just send me this company. You still didn't answer my question. Star, I'm not trolling. I'm not trolling. This is something that somebody I personally know purchased a good amount of at like $1. Wow. I'm kind of shocked. Oh, okay, hold on. Hold your horses, everybody.
Filed their paperwork to go public. They filed confidentially with the SEC, making them officially in line to go public in this parade of tech companies that we're seeing line up to list at some point this year, saying in a press release, in a blog post here, the company saying that they have officially joined the IPO queue. Pretty much they take the next step here towards an IPO, say that they have confidentially submitted the draft paperwork, and it gives them the option to go public. They say doesn't guarantee that they will go public, but this helps them prepare and be ready. They talk about market conditions and sort of leaving the door open for them to also not list. But of course, the backdrop here is their rival, OpenAI, we have reported, has also been in the same position, has been looking to file confidentially. That is sort of in limbo. But the latest we had heard was that they were looking to file and in the same way confidentially. So we don't see any of the numbers quite yet. But they have been seen as first, that OpenAI was the one to go first. It seems like Anthropic is sprinting here to either get out ahead or at least be on par with where OpenAI is. It also comes as we see SpaceX listing. Finally, last note on Anthropic, we reported just last week that they closed a massive financing. It was $65 billion, $965 billion valuation, almost $1 trillion. And there were questions over, is this it before they go public? Will they tap private markets, public markets? Here's the answer. They're looking to go public, I think sooner than a lot of people thought, Leslie.
Yeah, that is remarkable, especially against that context of the recent round that they just raised. Do we know anything about those investors and the lockup or, their appetite to sell into an IPO from that, what was it, Series H round that they
Series
just did?
H. We're getting quite high up the alphabet as these companies stay private longer. But one thing that did stand out with a lot of the investors that you saw on the cap table, some of them were previous investors, but they were sort of the crossover funds. You had the leaders in this were Altimeter, you had Dragoneer, you had Sequoia, and those are seen as sort of the long-only funds that might get in at the last stage. Sequoia is a little bit different and sort of a hybrid, but you had T. Rowe, you had Fidelity, you had a lot of the names that could strategically get in pre-IPO, really the growth investors that would be seen as sort of the strong hands, as Wall Street Bets might put it, but the ones that aren't going to flip, then they're not going to sell in a knee-jerk reaction. And that sort of set the stage for, okay, this company appears to be getting ready to go public. I had heard from investors that, yes, they were doing the paperwork, they were talking to lawyers, but they were still leaving the door open for, hey, maybe they don't need to list. I think a lot of this is going to depend on market conditions. But Leslie, you and I talked about Uber and Lyft. This is very much a rivalry. These companies have been public about how much they really just don't get along. They are now competing fiercely in enterprise. All you have to do is look at the photo of Sam Altman and Dario Amodei on stage, not holding hands. That is iconic, and it just encapsulates the competition between these two, which has spilled out into the open. You remember the Super Bowl commercial? We are going to get a fiercely competitive IPO season.
Yeah, and it matters because it doesn't feel like there's a finite amount of capital in the world, but there is a finite amount of capital in the world. And so you benefit by going first because presumably you want to make sure you get the highest quality book. Highest quality is the term they usually use for those long-only investors or crossover investors that you were mentioning that will be more likely to hold on to it and not just flip if there is a pop. Kate Rooney, thank you so much. Amy, I turn to you on this because there has been a lot, and it's kind of a controversial idea.
All right. How many of you are buying Anthropic? We'll get back to this in a moment, but how many of you are buying Anthropic? Let's say, I want to know this. Hold on. Which one are you more excited about? Anthropic, OpenAI. I want Anthropic. I mean, I want both of them. Oh, I'm with you on that. I want that too. By the way, while we're letting the poll go, I'm not sure if you've seen me discuss BST before, but it is an indirect way to get exposure to both of them, Anthropic and Anduril. It's the BlackRock Science and Technology Fund. Anduril private placement, Anthropic private placement, Databricks also. I've been in the fund for a long time. I like it. Pays 6% distribution. It's from BlackRock. I happen to like it. Anyway, how's the poll doing? Man, 93% Anthropic. Holy cow. My take on this, Anthropic is the one that will win the enterprise side. And I think OpenAI may have a stranglehold on consumer. We'll say. But I'm a big Claude fan. And then M1 Bobby comes along, Amazon and Alphabet. You can't argue with M1 Bobby. Man's got a point there. The man's got a point. All right, we're going to call the poll in a few seconds, everybody. The landslide. This is one of the landslide polls. All right, I wonder what Terra Nova has to say about this.
I've heard from people on one hand who say, don't worry about the IPOs. There are 3 big IPOs that are coming. And if we look at what happened in the 2020, 2021 era or the .com, it's nothing bigger than the market's been able to handle at one period of time if you kind of adjust for inflation and so forth. On the other hand, people say, there are so many different elements to the piping of the markets, whether it's changing indexing rules or the SPVs and people rushing kind of before these IPOs to get exposure. How are you thinking about it?
I think there's a lot going on here. I don't love the Nasdaq changing the rules from 100 days to 15 days that the stocks would be in with before lockups expire. I don't understand that, actually. Why would you do that to new investors in an IPO? So I actually do think it's a little worrisome. It's $3 trillion or more of market cap that's expected to go public in these names. The whole market is 78 trillion. So it's not nothing. As you said, it's not necessarily going to move the needle, but I do think there is some froth. These companies don't have earnings. They're going to have very high valuations. So to me, that's a little reminiscent of 1999, 2000. And you also have all these small AI companies that are billion-dollar companies that have an idea and don't have earnings, and that is reminiscent of 1999. And I lived through 1999, so I think that's true. What the other side, though, what Joe is saying about earnings is how important earnings are. And semiconductor earnings have doubled in 2 years. That's not normal. That's not typically how things work. Broadcom's earnings have quadrupled in 3 years. NVIDIA's earnings have quadrupled in 3 years. So the question is, do we have sort of elements of the 1999 bubble on sort of the AI side and potentially one of these guys ending up like Netscape? And then on the other side, you kind of have an earnings potential bubble, which is much more reminiscent of the global financial crisis, and home builders and banks. And those stocks actually had earnings and they never got particularly expensive. They were always in the 10 times earnings range, and everybody kept pointing to them and saying they're fine earnings, but it was very cyclical. And that's sort of more what's going on in the semiconductor space. So I think it's very important to sort of know what you're looking at and not conflate the two and not say, well, semiconductors are still cheap, so therefore we're not in a bubble, because that might be more on the earnings side. And then, when people talk about the AI space, they're like, well, look, it's not like 99. These companies have such great cash flows and earnings, but now they're talking about the semiconductor side. And in my mind, I try to keep them distinct. There are two distinct things that are happening right now.
Well,
yeah, so I think I share the sentiment of concern that Amy is expressing as it relates to where the demand comes. And I think that's a question that's been raised throughout the financial services industry over the last 6 months. Let's keep in mind a couple of things. Sovereign wealth funds have been the marginal buyer for the Mag 7 over the last 18 months. Do they shift their intentions now towards the IPOs? I don't think universally you can make a declaration that it's binary, they will or they won't. I think they'll find things, certain names appealing better than others. I think very clearly over the last 12 months, from a sentiment perspective, there's a much warmer feeling. There's the similar feeling that we have about the New York Knicks, right? As it relates to Anthropic. Relative to OpenAI, it seems as though Anthropic has surged ahead of OpenAI. I can tell you as a user of Claude, I think that's justified. So look for who has the relationships with Anthropic. That's your NVIDIA, that's your Amazon, that's your Alphabet. These are trillion-dollar companies. So you're not going to really see reflected in their share price what the potential demands could be. But let's pull up an intraday on Zoom Communications, because I've been talking about this stock for the entirety of 2026. This company makes a $53 million investment.
You know who else has been talking about Zoom? Chris Patel. Chris Patel has been talking about Zoom because of the Anthropic ownership that they had, et cetera, et cetera.
2023 in Anthropic. That stake is arguably worth $6 or $7 billion right now. And you could see the spike intraday. Zoom Communications is up 9% today, and it's up. Why? Because there's a better feeling for software, but there's also that relationship, that investment in Anthropic, and they've been benefiting from it as investors are getting ahead of this IPO.
That's actually also helped the earnings of the hyperscalers. They have remarked their Anthropic and OpenAI investments, and you're seeing that in the earnings estimates. So as much as everybody's getting so excited about the earnings estimates, some of them are not as real as we'd like them to be, potentially.
And there's kind of like a second derivative play there. If you're kind of worried about getting allocation to the IPO, maybe you do something like a Zoom.
I mean, she's not wrong on that point. I mean, look, Zoom put a good amount of money in Anthropic. It's on the balance sheet, shows up in the earnings. I am not sure about their underlying business. I know that they made a huge move into VoIP, which is voice over IP. Come on, let's not say delusional hope on the Knicks. Okay, you gotta believe. Even though Wemby is a force of nature, absolute force of nature. Well, this market is something else, everybody. It is something else. I'm really excited about it. Look, we want a deal, but even if we don't get a deal, there are things that look interesting. Microsoft around 460. This is still disrespected. Meta around 610. A lot of people are calling it the lag 7. Amazon at 264. Alphabet at 372 now. We may see a complete change in the Mag 7 right again. I mean, what do you guys think about that? Oh, this is actually something we need to discuss. So we'll go to that in a sec. But when I'm done with this thought, what do we think about the Mag 7 riding again? I think that they're going to do very well. 1% PB. Come on, I'm a realist. The Knicks sweeping the Spurs, and look, a lot of people wanted the Spurs because the Knicks did good against them during the regular season. I think Wemby's fired up, and I think Wemby's out on a mission. All right? I really do. It's my own opinion. It's my own opinion. Wemby, I would not bet the Knicks, and I bet I would not bet the Knicks. All right? Just my own opinion. Jack, I'm with you. I'm with you. Amazon is my play. I mean, I own all of them, but I do think Amazon is just in such a great position right now. It's pretty hard to bet against Amazon. It really is. So we're going to go listen to the AI infrastructure from Oracle, and we're going to go down the rabbit hole.
Data center being developed in Michigan for Oracle as part of its Stargate partnership with OpenAI. David Faber joins us live from the site for an exclusive interview with Oracle's CEO. David.
Leslie, thank you. That's right. I am joined by Clay McGurk, co-CEO of Oracle. Nice to have you here.
Nice to be here. Thank you.
Yeah, you know, I just had a tour, at least something of a tour. I mean, you can't really, even on TV, you can't really have people.
Yeah. I'm not a fake New Yorker. I'm just being a realist. The Knicks don't have a great chance against the Spurs. Listen, I said the same thing about the Yankees. I'm the biggest Yankee fan you'll meet when they played the Dodgers. Okay. Did I think we were getting past the Blue Jays? Yes. Did I think we were getting past the Dodgers the year before? No, I didn't.
Fully understand the size and scope of these projects. It's just so big.
Well, I think it's big in all the ways, right? It's both big in terms of the construction. It's big in terms of the amount of people that are working on it. It's big in terms of the impact it's having in the world. It's hard to understand. And I feel like as someone who spends my time on it, you go away for a minute, you come back, and it hits you every time. It's always big.
Yeah, you know, it's funny. We're talking to Jeff Blau, of course, the developer here. $16 billion is the number I keep using in terms of the cost. But that is only the cost of putting all of this up. What is the ultimate cost for Oracle, for example, in terms of everything you've got to put in there to make this an actual data center?
Yeah, so the way to think about it is that roughly, you know, if a site like this, like you said, $16 billion, it's going to be an additional 30 to 40 billion to put everything inside of it in terms of, you know, the networking, the GPUs, all that kind of stuff. So, and then that stuff obviously gets replaced over time. So thankfully, we're able to design the buildings for a long life, but the actual infrastructure inside ends up being much more expensive and then goes through a shorter lifespan.
Yeah, as we enter what we're calling the inference age, not the training is going to stop, does it change what goes inside the building?
It does and it doesn't. So the good thing is that the same capacity that you can use for training can be used for inferencing, but there are a lot of very specialized inferencing technologies that are coming out. So they're much more cost optimized, they're higher performance, lower latency. And then obviously, you know, you're familiar with NVIDIA and AMD, but there's a lot of new interesting startups that are putting out products. And a lot of the big model providers actually have their own inferencing dedicated chips that they're creating themselves.
Yeah, there's that question about latency in terms of the geographic location of many of these data centers. They're typically in places that are not near an urban center, in part because there's abundant power and land.
Right.
Does that become more of an issue as inference takes control, so to speak?
No, I don't think so yet. So the good thing is that the speed of light is relatively fast in comparison to how long it takes us to kind of do the computation. So when we think about like latency, we're not talking about the microsecond level, like high frequency trading, like some of your customers do, where let's put it 7 feet closer and we'll win. This is more about how do I make it take only 1 second instead of 10 seconds. And so location matters less rather than the overall like architectural design of the hardware itself.
All right, so we talked the compute that will go inside what will eventually be here, and we're going to come back for the opening when I guess it's only a year and a half away.
It's not, yeah, it's in 2027.
By the way, so what do you have up and running? Stargate was announced with great fanfare. The numbers were hard to imagine. You're actually delivering on that now. Abilene is certainly, but how much do you have up and running in terms of the data centers that you're delivering under the Stargate banner?
Well, Stargate's is a all-encompassing kind of concept. What I can tell you about Oracle itself, last quarter we delivered on the order of 400 megawatts. We're on pace this quarter to deliver more than that, and then you'll continue to see acceleration from us. Abilene We started with our first couple of buildings that delivered kind of late last year. And then we are very rapidly, it's 8 buildings in the original Abilene site, and we've delivered another couple of those right now. So that's moving very fast. But across Stargate as a whole, we've got multiple sites around the country. We've got what we're doing here in Michigan. We have a wonderful site in Wisconsin, a site in New Mexico, and another site in Texas, all of which, combined with the original Abilene site, are really dedicated to pushing forward, the next generation of AI.
Are you on the right track then to meet your goals in terms of what you're going to spend and what you're going to be able to deliver in terms of power? Well, it's measured that way, but in terms of compute?
Look, anyone who sits here and tells you they're doing 5 of the largest construction projects ever invented, what does it mean to be on track? What I can say is that based on all of our expectations, both in terms of the construction process, the permitting process, power generation, GPU delivery, all of it's actually going, on schedule or ahead of where we expected it to. And you see that in terms of what we're delivering to our customers and also the commitments that we're making to our investors and our partners.
Yeah. Speaking of being on delivery schedule, we do think of it often as a race. You're in a race against some of your competitors, and then we as a country are said to be in a race with China. Do you view it that way?
I tend to be much more internally motivated. So I think of it as the best way to get somewhere quickly is to focus on yourself and not so much on the competition. And by that, I mean what I know is that our customers rely on us to deliver things as absolutely as quickly as possible. There is more demand today than we can deliver. And we are out there constantly trying to figure out how do we deliver it as quickly as we can, because we see the huge benefits that AI brings. And we think it's really important that we get there and deliver that to our customers and all of their customers.
Yeah, but I do wonder, Clay, though, it is being described, our ability to build data centers like this is a national security concern. The development of AI, of course, we are in a race again with China. Do you not agree with that?
If you're asking do I think that AI is critically important for the success of the country? Absolutely. Do I think that this is like a transformational technology, and the quicker that we can actually build and scale it, I think it's going to be better for all Americans. What I'm saying is that, are we in a race with this person or this person, right, that country or that country? What I know is that if we actually go out and we build things like what we're building here in Saline, I'm very confident that the American life will get better for all Americans.
You are confident
I
in that,
am.
by the way, because as you know, there's a great deal of backlash, not just against data centers, but against AI in general. We all saw some of the commencement speeches, for example, where notable speakers were booed by graduates. We're not making this up at this point, that there are a lot of people very concerned.
Yeah, I think that anytime you have a transformational technology, I think people are worried. I think in times of great change, it's very easy to be fearful. And I don't have all the answers. But what I do know is, look, I spent my entire life, my entire career as a technologist focused on with a firm belief, and I've seen it play out time and time again, that we build great new technologies and then we use them responsibly. And it's a huge benefit to our people. I don't see any reason that this technology is any different.
By the way, your stock's up another 8.5% today. It was up 10% on Friday. It's all your great leadership, I guess, right?
Something that I was given wise advice by Safra one time was never take responsibility for good news unless you're willing to take responsibility for the downside. What I can say is I think that Oracle is doing incredibly well, and I think that this space is doing incredibly well.
Yeah, I do wonder because, it was up in part because of that incredible quarter we got from Dell and just sort of all of the fervor around that, and obviously the insatiable demand part that we're talking about. But there are some questions about compute and how much of it is being used by corporate America and how much of it is being used for a productive end. I mean, what are you seeing from your client base, given suddenly people are saying, wait, what's my compute bill this month? How did it get to that number? And who's using all of this for what?
Sure. Well, I could even talk. I have insights into our customers, but even just Oracle ourselves, we're a big customer. I think that with the advancements that have been made in coding applications, in terms of the models and how they can help accelerate software creation, it's unlike anything I've ever experienced, right? I started programming really before the internet. I got to go through how the internet and open source changed technology. I got to go live through kind of the cloud transition. Nothing has changed the way we write software, the way that AI models are doing it. And it's incredibly addictive. It's empowering. Yes, it has a cost. But I think that we're learning, all of us, this new technology. We weren't we weren't doing this way a year ago. And the demand is really, really high. And we see that ourselves at Oracle across our application portfolio, as well as the way we use, software, these agents to kind of write all of our software. But we see it for our customers as well, as it embedded into things like our healthcare applications, our fusion applications. The demand is, I would say, still continues to outpace supply.
And do you think your customer base understands the efficiencies, the productivity that they are getting from it? Do they have a good read on all of that, or is that kind of yet to come from some new layer that needs to be added?
Yeah, well, I think it's actually it's less inventive than that. So if take, for example, software development, if you take the actual process of writing the code and you shrink it down even to zero, you don't suddenly have infinite productivity, because you have a lot of processes. How do you test the code? How do you do release management? How do you deploy it? So part of what's actually happening across all of these enterprises is you're having to re-engineer your entire processes to take advantage of this much faster way of doing things. And so right now, I think we're in a phase where we've taken one portion of the puzzle and made it really efficient. And what we're all having to realize is that we have to actually re-engineer how we work as a whole. That's going to take time, because that involves people understanding processes and learning and changing. But I'm very confident that with this new technology, we're going to be able to see massive productivity gains.
All right, so that will take me a year and a half out when we're here celebrating the opening of this this facility, doing inference and training workloads. I mean, things are moving so quickly. What are we going to be talking about in a year and a half in terms of what this is going to be processing for the enterprise?
If I knew exactly that answer, we could go do a startup and we do that instead.
Sure, I'm ready.
Look, I think that we've clearly seen product market fit with coding abilities. I think that we're going to see more and more specialized models that actually create more and more use cases. Like we spend a lot of time at Oracle focused on healthcare. I think there's a lot that's going to come about as we get this flywheel going that really transforms multiple different industries. I mean, I look within my organizations, it's not just my programmers that are using this technology. The way in which we do finance, the way in which we do accounting, HR, it's all changing. I wish I could tell you, I know like what we're going to be discussing in 18 months from now.
Right.
What I do know is it's going to be moving very fast. It's going to be quite different.
Yeah, I mean, finally, Oracle is known still, I mean, in many ways, as an enterprise software company. Obviously, You're also this.
Yes.
And there has been thought that there's been a risk to your overall business as a result of being part of sort of that SaaS apocalypse, so to speak. From your vantage point, sort of running the infrastructure, is there a real risk? Do you see it at Oracle in terms of at least the next generation of enterprise software kind of getting built on an entirely different stack, for example?
I think there's a risk if you're not using the technology to make your products better, right? The good thing is that at Oracle, our customer base and our existing technology are not a liability, they're an asset, right? So we have customer relationships. We actually understand their needs. And we actually have huge install base in terms of technology. The fact that we can use AI and then go in, revolutionize how we're delivering those applications and then deliver it to those customers very quickly, that's actually an advantage, not a disadvantage. If someone said, hey, would you rather be starting a new SaaS business from scratch, or would you rather be starting with one of the world's most comprehensive SaaS portfolios? To me, it's a very simple answer. Yes, I'd rather start with the customers and the relationships and the huge technology advantage. But you cannot wait, right? The reality is that you can't.
Very important what he just said. Very important.
Keep doing what you were doing before. You have to be developing applications in a new way.
Yeah. All right. We'll be waiting on this for the next, I guess. How much of your time do you spend on this? Not this, but on the projects, of course, that you've committed to?
It's a hugely important part of my job. You should not underestimate the difficulty of building multiple of these sites around the country, from supply chain through the actual design and build processing, working with our partners. It's a lot of my time. But honestly, what could be more fun than doing this?
You're at the forefront, that's for sure.
Okay.
All right. Clay, thank you.
Thank you.
Always
for having
appreciate you taking time. Clay McGurk, of course, co-CEO of Oracle.
All right. Look, this is not stopping by any means. I don't want to be that person that just says that we're in a never-ending bull market, because we know that's not true. We know markets can decline. We know a bear market eventually will happen. We know that we're going to get a recession at some point. The reality is it's not happening right now. When we look at what's going on, a tremendous amount of money is being spent. The AI trade is real. And Nebius is at 271.55. I wouldn't say recession canceled. There was never really a recession on the table. I mean, I don't know that we see a recession for the next year or two. That's all gonna depend on unemployment at the end of the day. Unemployment is going to be the main driver of recession. I'm actually surprised we're not above 5%, but we're not. This tells us everything right here. I mean, there are still companies that are inexpensive. I think Salesforce and ServiceNow are inexpensive. I think Zeta can run. I think next decade, when you look at the data, super interesting. Micron can run. Uber should run. Now, if it does, who knows? NVIDIA breaking out. I mean, I did call Captain Sleepy Time and I said to him, NVIDIA should be 275. I mean, it should be. Is it getting there anytime soon? I got no damn clue. I have no idea. Of course, AOC and Bernie are chirping up. Two people that don't understand technology. Palantir, 161.58. IREN, 65. Microsoft, 461. It's, look, tech is going to lead the rally. Look at IBM, 325. This is the most hated rally there is. This is the most hated rally because you know what? Everybody wants everything to fail. People are mad that they're not in these investments, et cetera, et cetera. You can't think like that. The way you got to think about this is, how is it being funded? Is it debt or cash flow? Or are these companies monetizing assets? Is this really transformational technology? The answer is yes across the board. Reddit back down to 178.67. Okay. Space Mob. Rocket Lab 122. Rocket Lab, I think, is trying to come back a little bit. I mean, space is down, but you guys know what I think. Okay. Do not let me persuade you. My personal opinion is Rocket Lab is expensive. That's my own personal opinion. Rocket Lab could also go to 200. And in my opinion, they're the biggest beneficiary of the SpaceX IPO. SpaceX holds 2 trillion or goes up. Rocket Lab's going to do incredible. I don't have a crystal ball. I have a Temu Magic 8 Ball. Okay. Is the stock market going to keep going up? Or let me rephrase the Magic 8 Ball. S&P 8,000. Are we going to get that this year? Ooh. It says yes, we are. S&P 8,000. Magic 8 Ball confirmed. Look, Meta going down $21. My opinion, that's BS. Okay? I think that's stupid. I think Meta going down $21 is stupid. I think Apple going down is warranted because nobody knows if these NVIDIA chips in NVIDIA PCs are going to chip away at their moat. Who knows? But something like Meta going down, Hood coming down, I don't know. Qualcomm's the one to really watch. If we can get Qualcomm coming back to 175, that may be something that starts to look a lot interesting. Some of these companies I don't believe should be down. I really don't. Google should not be down. Now, AMD, I think, is going to flutter around. Costco should come down. That's one that should. All right. SoFi, 1857, everybody. Microsoft's running. 461, gotta love it. NVIDIA, 221. I mean, Captain Sleepy Time's got to be pretty damn happy on that one. Has to be, right? ServiceNow 135, IBM 324, Nokia 1620, Salesforce 209.76, Zeta 2516, CoreWeave 124.56, Nebius 271.21, ARM Holdings 414. ARM Holdings is breaking out because of NVIDIA. Joni, RDW makes components for space. I want to know if there's any information on if they make anything for the spaceship that just crashed, because people are treating this stock like, We can ask Claude. I have no idea. That's probably the quickest way. Can I? I can't highlight and copy. Why not? Hold on. Let's see. What is RDW? What's the company name? Redwire. Okay. Does Redwire Corporation make components for the spaceship that just crashed? We'll see what Claude says, because I got no clue. And then you got Berkshire buying Taylor Morrison. Makes no sense whatsoever. Berkshire buying Taylor Morrison. I don't know, everybody. At least for me, I start thinking that these guys are going to start turning a corner with their investments. Greg Abel's going to start doing equity purchases of tech companies, and then they freaking buy a home builder. Like, what are we doing? I don't know. I was excited about Greg Abel, but this is proving me wrong, everybody. I get shit wrong all the time. All the time. ServiceNow 135. Salesforce just got over 210, everybody. Zeta 2518. I am working on a couple of new things that I think are interesting. I'm not ready to really talk about them yet. Oh, Joni. Here we go. Starship V3 booster on May 22nd. The answer is no. Redwire doesn't make components for it. If that's the one that you're talking about. QXO is very interesting. The thing you got to remember about QXO, everybody, is that they are a rate play. You can't have QXO do well without rates kicking in or oil coming down. It's a play on both of those. I mean, QXO is a very interesting story here. And to help me, I'm going to go to their investor relations site. I want to bring something up. Where is their latest presentation? Leon, thank you very much. I went 80% cash during the Iran scan and missed this leg. Dude, look. I'm going to give you the best piece of opinionated advice I can possibly give you, okay? This is why I don't time the markets. And I know that's not what you want to hear, and I'm going to get to what you want to hear. But look, I know, and I think this is why a lot of you tune in. I really try to be realistic and a realist, and I don't hype shit up. Look, I know what I can't do. I know that I can't come in and sell at the perfect time and get back in. I know that. Now, look, have I called bottoms? Yes. That doesn't mean that I can operate them. You know what I mean? Like calling the bottom on Liberation Day wasn't hard, but you know what was hard? Taking money out of the market. I didn't do that. I held the whole way down because you know what? I know that even though I have a pretty good beat on the macro, I can't trade. Like I really can't. And I am much better on a long-term thesis than a short-term thesis. And we're happening to see things play out. I mean, I don't know many people that can get out and get back in at a great price consistently. Maybe you can do it once or twice, but it's so hard to do that. Like it is so hard. Being an active trader or active investor is not easy. Okay. It's much easier to build a thesis and say that my thesis is X. I mean, look at Micron with me, right? I missed it on the way up. It went to 840. It came down to 690 or something like that. I bought it at 709. And what did I say publicly? I have no clue if it's going up or down, but I believe in the story. I believe that their earnings are going to grow, and I think it's inexpensive. And if it goes to 600, I'll double down. And if it goes to 500, I'll double down because I know I can't time the bottom. And I had to accept that I'm buying at the wrong time. Luckily, I didn't have to do that. But I know that I can't do certain things. Oh, they shouldn't call me FOMO Rillo because of Micron, because Micron, I'm up like 50% in a month. So that's not FOMO when it's trading at a single digit forward PE. If it was trading at 100 PE, that's FOMO. But look, I can't tell you the best way to scale back in. What I can tell you is we got two things that can happen right now, okay? Scenario A is a scenario we do not want to happen. We get into a even larger conflict with Iran. The strait remains closed. Oil goes to 150 plus. Inflation and PPI expand. We head into Jackson Hole with CPI over 5%, and they come out hiking. The market, the S&P, that happens. We're going to 6,500, probably 65 to 6,800. It ain't staying here. And you'll probably get a much better opportunity. But there's a difference. There's a difference. If we get a deal, we have seen oil go from 104 to 89 overnight because it looked like we had a deal. Oil is still under 100. If we actually get a deal and the strait is open for a week and oil is flowing, you are then in a situation where oil is going under 80. You're in a situation where CPI and PPI can cool and they can come out of Jackson Hole cutting in September. That happens, we're going to like 80, 82, 8,300 by the end of the year. So how you scale back in, I have no idea. This is why I buy the S&P all the time, because it allows me to have a lot of confidence. And no matter if it goes up or down, I continue buying and I continue dollar cost averaging. If I did not have money in the market, if I was looking for an opportunity, personally, and this is not financial advice, I'm just thinking out loud, knowing or subscribing to the idea that you cannot time the market, I would build a core position for myself in SPY or a S&P 500 index fund, because that's what I currently did. And then I would pick some narratives that I think are going to work out for a long time. I think an Amazon narrative is going to work out for a long time. And I would scale into Amazon. I would probably scale into Microsoft here because I think that narrative works. But I don't know that I would take a lot of chances. I mean, I'm at a much different mindset these days. I think Salesforce is very undervalued. I would probably take a flyer on that. And then we get stuff like this. But Steve, S&P is slow. I need a small number to go big number fast. Yeah, don't we all? Don't we all? But that's not realistic. I mean, look, what we're seeing in the market's not realistic, everybody. Maybe animal spirits continue. Okay? Maybe they continue. I have no idea, but think about this. If we don't get a deal, you have to think that Nebius, CoreWeave are going to get slammed. You have to think that the stuff that's working is going to get slammed. I mean, maybe they don't. Austin, same advice for building your first 100K. I mean, look, people build their first 100K in all different ways. You know, I think there's also a level of what you can sleep with, what your risk tolerance is, how much money do you make, what are you able to put away, what is your lifestyle. There are so many things that happen with investing, and everybody's different. Look, Amit and I have different investment styles. Tanner and I do. Chris and I do. Matt and I do. We all have different investment styles. There is no one style that is perfect. All of us have made money and lost money. You know, it's what's your style? Do you have conviction? Do you have a real thesis? And what's your risk profile? What are you able to put in? Do you have a mindset of whatever you put in the market is going to zero? And I'm not stealing that from Matt. Our motto is whatever we put in the market, we have to assume it's going to go to zero and we can lose all that money. Like whatever you put in the stock market, and I'm not talking about an S&P fund, okay? But in all serious, for me and my wife, anything we put into individual equities, we assume the risk it's going to go to zero because it could. There could be accounting irregularities. There could be fraud. There could be unknown competitors. There could be so many things that happen that you have no control over, that you have to make that assumption. Now, S&P 500 of the biggest companies in the US, pretty hard for that to go to zero. And if it does, we got a lot of other problems. So, you know, that's just my little rant on that. I don't know how to scale back in. I just know that I'm going to give you a very interesting conversation that I had. January or February 2020. The CEO of our company, great guy, okay, put money in for his daughter's account to save for college. And then what happens? COVID. Says to me in like, him and I were two of the only people that went into the office during COVID. It says to me, well, that wasn't a good idea. I mean, remember how much the market went down. But you know what? He bought at the top. Nobody knew what the hell was going to happen. During COVID, living in New York, pretty damn scary. Okay? Nobody's allowed on the roads. You're not allowed out of your house unless you're going to get food or something like that. Now, granted, we were allowed to go to the office, but, you know, nobody knew what was happening with the market for a couple of months. That was the scariest time in the market in a long time. Liberation Day, this stuff with Iran does not hold a candle to COVID. And what happened? All that money he invested for his daughter ended up making a lot of money in the long run. So you can't worry about buying at a top if you're, this is strictly S&P. This is strictly index fund. You can't worry about not catching a bottom. You just have to have the time value of money and you have to have a long-term mindset. I mean, it is what it is. You take a big gamble no matter what individual stock you buy. You take a big gamble. And you have to make goals. You have to be very honest about what you're investing for. You know, are you trying to buy a multi-million-dollar house in a year? You have to make 2,000% on your money. That's not realistic. Is it possible? Yeah, it's possible. It's not realistic, though. Are you saving for retirement over a 40-year time horizon? Well, then you got 40 years for your assets to work for you. You don't need to take bullshit chances, because that money in the first 10 years is going to build your base for compounding. You don't fuck that up. So I don't know, that's, I hope that you got something out of that. I know I didn't directly answer your question about how to scale back in, but it depends what your definition of scaling back in is. What's going on with Zeta? Oh boy, 24, 25, 24. Look at that. Gotta love it, everybody. Love it as much as I love my coffee. Thank you, Geoff. Really appreciate it. Putting away money for my 1-year-old daughter. This is what I'm going to say to you, Amelia. I'll tell you exactly how I invest for my nephew. You ready? My nephew is 9 years old. Okay. I want him, my wife, his parents, we want him to have a much different situation than we did at 18 or 22, whenever we decide to give him the money. Okay. I can tell you that I am probably a bigger influence in what we are buying in that than anyone else. Just, I follow this. Obviously, you guys know I follow the markets very closely. The number one thing we buy for him is VOO. It's the number one thing we buy for him. Did I buy him Palantir? Yes. At $9. Did I buy him SoFi? Yes. Did we buy him NVIDIA? Did we buy him Amazon? Yes. But the majority of what we buy is VOO. I mean, it's just, it is what it is. He's 9. I don't know what he's going to want to do. I mean, I asked him the other day, what does he want to do when he grows up? And he said he wants to watch TV and eat gummy bears. I thought it was hilarious because that's what I want to do when I grow up. But look, the reality is that when he turns 14 or 15, I'm going to say to him, come work for me. I'm going to say to him, spend 2 weeks in the summer, come work for me. I'm going to set him up with a station. I'm going to give him money. I'm going to teach him how to value companies, from my opinion, and I'm going to get him interested in the stock market. I'm going to set him up with an account. This is what I'm going to tell him. Losses are on me. You don't owe me shit. I love you. Period. But you're going to learn how to make money, and you're going to learn how to invest. And I'm going to get him addicted to the stock market. And he's going to have no idea that he has a different account. But I mean, I want him to be in a much different position. So, you know, can I do that for you? I'm sorry, I can't. But look, you have 40 years, or you're investing for your daughter that's 1. I mean, look, you want to see something crazy? We're going to use your daughter as an example, okay? We're going to zero this out. All right. So your daughter's 1. So let's say this is a college fund, okay? We got 17 years. Let's say we're going to get a rate of return of 10%. Let's say, I don't know how much money you're putting in, okay? Let's say you're going to do $100 a month. Ending balance of $50,000. Now, let's say we do $250 a month into just an S&P fund. And this is under the rate of return that it's getting. $127,000. Now, let's just say we get 11%. Watch this number, 127. Watch this number with 1 extra percent over 17 years. Goes to 140. I mean, that's a pretty damn good return. Now I know, oh my God, we're not quadrupling our money. Check this out though. If we take that 140,000, okay, and we don't put another dollar in, 18, and we let it sit there for 40 years. So by the time your door is 58, becomes $9 million. How crazy is that? How crazy? How crazy? $9 million by the time that your daughter's 58. If you do that for the first 17 years of her life, and then let that just sit there with no additional increases, it is insane how big that can become. I beg to differ. You absolutely can. You absolutely can. If history repeats itself. If history repeats itself. Sure, it's only a calculator, but let's actually look at the market returns. You ready? Here's the annualized returns every year for the S&P. There's a reason the S&P's historical average over the past 50 or 60 years is 11.6%. That reason is that we have not had many sequences of down years. The last several times was 73 and 74. You had 2 consecutive down years. And then the dot-com bubble, you had 2000, 2001, first consecutive 2, then 01, 02. Hasn't happened since then. And since then, 26, 9, 3, 16 and a half, 3 and a half. Then we get 2008. And then after 2008, 23 and a half, 12.7, flat, 13 and a half, 29.6, 11 and a half, negative 0.73, positive 9.5, 19.42%. Then in 2018, down 6.25. And then, oh my God, 28.88, 16.26, 26.89. Then 2022, down 19.44. Then what happens? 24.23, 23.31, 16.39. And right now we're at 10.73. I mean, yes, you can just stick it in the S&P. I mean, I don't know. The data is the data. Now, this may not replicate, but you know what? If we're in the 90s again, look at what happened in the 90s. 91, 26 and a half, 4, 7, down 1.5. And then 95 was 34%, 20%, 31%, 26.5%, 19.5%. I don't know. I'd rather invest in VOO or SPY than a lot of other things, to be very honest with you. That's just me. That's just me. But yes, you can S&P and chill and have a pretty good historical record to go off of. I've been very open about it. 100%. 100% of my retirement is in an S&P 500 index fund. Sure, I remember the lost decade too. When you're talking about 3 years consecutively down, and then you get this, then the financial crisis. I get it. How many times has that happened in the past 5 decades? Once. Is it going to happen again? I have no damn clue. I have no clue. But if you held since 2000, I mean, and you're talking about 2000, so let's bring up a chart of the S&P and really look at this and game it out and see if it's realistic or not, okay? Because we're not talking about only having a decade. We're talking about having multiple decades to be able to do something for the long term. So if we go at SPY, no, my thing only goes back to 06. Let me bring it up on Seeking Alpha. Hold on. SPY. How far do we go back? All right. So SPY at the beginning of 2000 was 145.75. Okay. Yes, there was a lost decade. It took you more than a decade to get back to where it was. But from 145 to where we are now, a pretty damn good return. So I don't know. I don't know. Everything has risk. Okay. Everything's got risk. But you know what? At my age, there's no reason for me to be in bonds or do 60-40 or anything like that. There's just no reason for it. But that's also a personal opinion of mine. I mean, everything has risk, and we could be in a lost decade. And look, we could go up a ton from here and then have a 50% crash. That can also happen. We've done that in 2021. A lot of companies went down 50% or more. A lot of them came back also. It's more mindset and what your risk factor is and what you are able to withstand and what your time horizon is. But I mean, I can tell you for my nephew, this is what I'm doing. For my retirement, this is what I'm doing. And listen, I'm not the smartest person by any means. There are a lot of people who do really well. And I just know that I can't actively manage like that, timing, getting in and out. In addition, I don't want the stress. I want to be able to sleep at night. For me to be able to sleep at night, it's pretty easy to invest in the S&P. That's just my own little thing. And that's also what gives me the ability to take the risk I do in my regular accounts because I know I'm backstopped by a S&P 500 index fund. That is, you know, oh, I won some auctions. Look at this. Stevie won some auctions. Real quick on the alternative investment side, I am buying more Ben Rices. Yes, I am. I absolutely am. All right, let's see where the market is right now, everybody. ARM is crushing it, 414. Nebius Crude, 268. 268. CoreWeave, 125. Zeta Community, 25.29. Congratulations to everybody that believed in Zeta. Congratulations to everybody who held it, everybody who bought more. Personally, I think it's going higher. I don't know how long it's going to take. I have no idea. But I do believe it's going higher. I think that this is a great company that is going to continue to do good things. Nokia is running everybody. I mean, after the after the conference with Jensen. How could it not be? How could it not be? I don't know. I didn't get in it. I'm not chasing it. IBM's at 322, Oracle 243, Micron 1041. Everybody, look at that. Uber breaking out. Uberlicious 7409, NVIDIA 221, Palantir 161.80, Microsoft 460, SoFi 1861. I mean, gotta love that, right? Gotta love that. I mean, I'm a pretty big fan of the Mag 7 here, everybody. Very nice. I love that. You bought some Uber after basis points. Don't do anything based on me. Okay. I just think that when you look at, I am using Legend. I like the way it looks for real time. Mine is a little bit of a delay. So I am back to using Legend. And I wouldn't say that it's bullish hood. I mean, I don't know. Well, look, Legend's a good product for looking at it real time, right? What positions is Ackman going to take a bath on? Where's the space mob? All right, Rocket Lab's coming back a little. Rocket Lab may be finding a bottom like that. ASTS 103. If Qualcomm keeps going lower, I'm going to really make a consideration. MGM, are they getting acquired? Hold on. MGM. Oh boy, who's going to buy them? Diller bid? I mean, Fertitta's buying Caesar, supposedly. Thank you for becoming a new member. Really appreciate it. Private members only calls are on Sundays. Yep, June's been in Rocket Lab for a long time. And I agree. Rocket Lab could be the greatest beneficiary of, oh shit, greatest beneficiary of the SpaceX IPO. Look at this.
And use the backdrops in the market to take advantage of the
President Trump to CNBC. We're going to ask Israel PM Netanyahu what's going on with Lebanon. That's not what I said oh shit to. What I said oh shit to was President Trump to CNBC on U.S.-Iran negotiations. I don't care if they're over. That's not good. Not what I want to see. Not what I want to say. It is so frustrating. And look, that's why S&P is not crazy, because you can't predict what's going to happen. You just can't predict it. Ford, I've been a shareholder of Ford for years. I'm a big Ford fan. I am a very big Ford fan. So, yes, I am very bullish on Ford. When I bought it, I think the dividend was 6% or something like that. 6-7%. Yeah, volatility may be coming back. I mean, we don't know. But this is not a market that I would be looking to short. I can tell you that much. Listen, I don't short anything. So I'm the wrong person to ask. I don't believe in it. Too casual? Are you including ETFs? And what do you constitute as a real position? If you are including ETFs, I don't know, 180 to 225 positions. Now, keep in mind, a lot of those positions are bullshit positions. Okay. I mean, I have 108 positions in my dividend harvesting portfolio that has like 40 grand in there. So those aren't real positions. Is Bloom Energy going wild again? Maybe I should take a look at that again. 284. Oh, Laura, I do have questions. Thank you, June, so much. Laura, I am very interested in genomics. ARC-G is how I was going to play it. I don't know. I just think that genomics and biochemistry, biomedicine is going to do really well in the age of AI. That's just my own opinion. So I don't know. Are there any ETFs that you know of that encompass all that stuff? I just think there's no way that you get a don't do it. Okay. I don't know. My line of thinking was something like, how do we not have CRISPR technologies do some really cool shit? Oh, yeah. I mean, I'm looking 5-10 years out in the age of AI. I don't know. Fizwando, I don't think of it like that. I think there's people who procrastinate and people that do. I mean, I think everybody plans to a degree. I just, some people act on it. It is a wonderful day for Zeta. But you know what? Look, Zeta can go down tomorrow. We could get a pullback. We can't celebrate, even though it's a 25.64. We can't celebrate. This could go down. And plus, in all seriousness, listen, I'm not an ARC fan. I just don't know of any other ETFs that give you exposure to all that stuff. Look, I think Zeta is going to be a much bigger company in the future, but it can definitely decline from here. The 25.69 feels pretty damn good. Up 12% today. And it doesn't suck that Steinberg came on basis points before the rally happened. Kind of doesn't suck. But I'm super excited. I mean, I think over the next several years, Zeta is going to do big things. And I think it's a misunderstood company still. And the next one I'm really looking at is Uber. Uber's up 5% today. I think Uber, people are getting it wrong. And that's probably the next big one for me. I don't know. We'll see. Fezwando, it's definitely something that's been joked about. I don't know if it'll ever happen. Will you ever consider sharing your prompts for financial modeling in Claude? No. I'm happy to tell you what I did though. I'm not gatekeeping. Like, let's bring this up. Public service announcement. I am not gatekeeping anything. Okay. I tell everybody where I am getting my information from. FMP. What I would say, you can build something better than mine and more geared toward what you want. Get the API, talk to Claude, and just have it build you what you want. I mean, there's no secret to it. Like, there's legitimately no secret. Nothing of mine is public. I am debating making a public website about it, but I'm not sure if I'm going to. We'll see. I kind of want to do something, but at the same time, I don't really want to. I don't want to be an IT guy. I don't want to do anything like that. So MongoDB, I do not follow them, so I can't help you. Laura Nicole, if you know of any others, just let me know, please. I will definitely research them. We're cutting over to Gene Munster, somebody who I hold in very high regard. I'm going to rewind it just a bit. Hold on. All right, here we go.
Qualcomm, Intel down about 3.5%, still around 110. Qualcomm and AMD slightly selling off as well. And in just the past hour, Anthropic confidentially filed its IPO. Let's talk about all of it with Gene Munster, managing partner at Deepwater Asset Management. And Gene, perhaps before we get into that, I mean, look, I have people texting me from France. They're so excited about the software rally. Okay, so why don't you cool their enthusiasm a little bit?
Well, it's obviously an endorsement from Jensen when he talks about this explosion of agents having an impact on software usage. And I want to just kind of go a little bit deeper into effectively what he's saying about that that's kind of triggered this reality. What he's suggesting is that these software companies that have been around for a long time are going to come out with more agents, that humans will have hundreds or maybe thousands of agents that they'll be using on these software platforms. Built into that is this idea that usage needs to increase kind of exponentially. Currently, the software world is largely built on a per-seat model. There has been a shift over the past few years to embrace more usage-based models, but that's essentially the kind of the rub here, is that how fast can these companies really shift from a per-seat model to a usage-based model? And I'm reminded of what happened 20 years ago as software went from kind of desktop local software that was sold on upgrade basis every once or twice, every 1 or 2 years, that moving to kind of a hosted and the cloud-based models. There is a period where the market needed to kind of adjust what the impact of that model is. And I'm going to go back to one data point that we got when Microsoft reported their March quarter. The stock was generally doing okay until the very end of the conference call, and they started talking about potential changes to their model in terms of more moving towards more of a use base, and shares dropped a few percent based on that comment. And my point, Kelly, is yes, Jason's right, is that AI is going to create an explosion of agents. A lot of those are going to be doing software related, but it's still to be determined. One last piece. We're either going to go down two roads. Road number one is the software companies need to shift to usage-based models. Number two, if they stick with their per-seat model, that's going to draw the question of what happens with knowledge worker employment. Not suggesting that we're going to see a massive drop in employment. I think employment will go up, unemployment will increase, but just the idea of how do you grow a business? If you need smart people, you need knowledge workers using these, how do you grow it if the growth in those knowledge workers is flat or declines? And I think that still is a headwind. So putting all that together, Kelly, I think we're still not out of the woods. I can speak from our perspective. We expected a reversion trade in software. We've got it. And I don't think there's much to do here going forward.
All right. We could argue more about, not argue, but I could, play some devil's advocate and and put on my technician hat and all of that. But I wonder if we should kind of back out for a second and talk about some of the other parts of the market, the more surefire trades, which have been around the AI ecosystem, around the chips. Obviously, we have this NVIDIA news today. How big a deal is it, this chip that they're making for the PC? And I mean, to see NVIDIA shares up 5% is really something.
Well, from NVIDIA's perspective, the stock is essentially in line with what the Nasdaq has done over the past week, and that's an important piece to keep in mind. I think separately is we got a little bit of this on their May 20th earnings call when Jensen talked about what they're doing on CPUs. That, of course, is related more towards Vera Rubin, but it does have an impact in terms of what's going on the PC side. And that, of course, is that the impact of this is probably adds, I mean, these type of arrangements they're having with Dell and HP could add like 5, maybe 10% to their business. So it is measurable. It's not going to be a game changer. We're not talking about like physical AI, for example, could add 30% to NVIDIA's business. In the case of these, they're relatively small. But I think what is most important, the biggest takeaway from today related to, if we look at Jensen's comments with software and then look at the announcement on the CPU side, the biggest takeaway is that it's going to become more clear that localized inference is going to be one of the kind of the key themes that I think companies and investors are going to get behind next year. So if we're going to rewind to a year ago, we'd have been talking about 2026 and late 25 as the year of the agents. And at that time, a lot of people didn't really understand what agents were. Now, what we're seeing today, this news with NVIDIA, is that this concept of localized inference. And what that means essentially is that your computers are going to be able to do more AI. These are small language models. And that has just a ton of impact on everything we're talking about, from Anthropic's IPO to the growth in terms of PCs. And I'll get to the kind of the substance of the question. What does localized inference mean? Is that there's going to be a growing debate about how much inference is going to be done on the cloud, or how much can be done for far less with some of these smaller markers on a machine. And so that's going to be kind of, I think today is an important day in that sense, that we're really kind of officially starting what I think is the conversation around localized inference.
Yeah, no, and listen, we're going to talk to Dave Cote in a little bit. I'm curious if he has a point of view on that. Anthropic filing its IPO. You just heard Oracle's CEO talking to David Faber earlier on about how it's completely changed the way that they code, the way that they do business. It's different now than it was a year ago, all of these tools. Is Anthropic a no-brainer for you in terms of wanting shares of that? I mean, does it still come back to valuation, which is high, size, which is large? And how would you rank that versus SpaceX and OpenAI?
Well, the first exercise is to try to build some line between hype and substance. And when you look at what's, the talk of Anthropic going public, you look at what's happened with, Micron up 25% in the past week, Nasdaq's up 2%, up 335% in the last 3 months. That feels very hypey. And I would say, Kelly, first is that I think that even though it looks like hype, I think there's substance. I think that ultimately the substance of AI will exceed all this hype. And so I think that's an important piece, an important takeaway from Anthropic, them getting ready to ultimately go public. I'll talk about the SpaceX Anthropic comparison, but I do also want to mention is that your previous segment, you talked about what's going on geopolitically and the impact on inflation and all that. And of course, the AI trade is saying that that's becoming less important, that other stuff. And I would agree with that. I don't think we're going to see a DeepSeek moment, an inflation impact. The biggest geopolitical risk is going to be related to Taiwan, what happens there. And I don't think that's going to happen. Anything's going to happen the next year. And so said another way is that it's unlikely we're going to get a crack in this AI theme. And ultimately that's good for Anthropic. It's good for SpaceX. As far as comparing the two, now we're SpaceX investors. Comparing the two, I think that SpaceX is a much bigger upper hand, even though many will look towards Anthropic because it's a more profitable business, seemingly more reliable. But if you just think about when you are changing the world and you want to change it and have big ways where you can sleep well at night, knowing that there are big opportunities ahead of it, there's no company like SpaceX that can offer that. I mean, it just simply stands alone.
No, I'm surprised to hear you got to go for Anthropic, Gene. You're like, what? SpaceX? Come on, that's surprising. But don't worry, we'll have days and weeks more to talk about it. In fact, months really, with all of these coming down the pike. Gene, thanks for making the time today. Really appreciate it.
All right. I don't agree with everything he said. I agree with some of it. I think NVIDIA is a great potential here. A lot of things being said. I would prefer Anthropic over SpaceX. That's just me. I don't think the software rally is anywhere near being done. Let me answer this. BR Keys buy. I think it's bullish QXO. I mean, at some point, rates are coming down. At some point, oil is coming down. Short term, I got no clue. But they're probably buying it now because we're in a difficult environment. At least I would like to think about that. All right, everyone. Let's take one final look, and then we're going to let you go. ARM, blowing it out of the water today, 411. Nebius Crew, 268. CoreWeave, 124. Zeta Global, 2867. I'm sorry, 2567. I'm sorry, 2567. Nokia doing really well. Salesforce, 209. I mean, look, this is a great rally. Let's not let it get to our heads. This can turn tomorrow. It can turn later today. You got SoFi at 1867. You got Microsoft at 460. Reddit's coming back down 177. NVIDIA 221. It's a great rally. Where's space? Rocket Lab 125. It's stabilizing. ASTS 105. Meta 608. QXO 1682. See what happens. Steve, hear me out. ETF. World Cup alongside stock draft. 24 World Cup countries have ETFs. Would love for you guys to do it. I'll take it under consideration. Maybe I'll float the idea in the group chat. We'll see. Thank you, Little Rock Soccer. Interesting idea. I like it. All right, everybody. I'm going to get going. I got to try to write an article. Got to do a few things. It's 1:33. I will be back with you at 6:30 tonight. And then at 9 o'clock with Chris Patel for Inside the Numbers. All right. You guys are saying Trump tweet. Let's look. Truth Social. Did Donnie T say? Oh, he did. All right. Before we do, I had a very productive call with Prime Minister Bibi Netanyahu of Israel, and there will be no troops going to Beirut. And any troops that are on their way have already been turned back. Likewise, through highly placed representatives, I had a very good call with Hezbollah, and they agreed that all shooting will stop, that Israel will not attack them, and they will not attack Israel. President Donald J. Trump. Okay? I mean, that's better than the alternative, right? We'll see what happens. I will be back later today with everybody. Thank you very much for being here. Because of all of you, I get to do what I love to do. Really appreciate all your support. Thank you so much. I'll see everybody in a few hours. Have a great rest of your afternoon. And as Chels and Lena like to say, make sure you get your steps in. All right, everybody. See you in a little bit. Thank you very much.